This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Taylor from Life Goal Investments. And something I love to do with my guests is ask questions where I get to learn. How you doing, buddy?
Let's do this. I'm excited. I like this topic. So let's chat about it.
So there's this, I don't know, metric called the VIX. So do me a favor for the audience, define what it is.
Yep.
I've always referred to it as the fear gauge. The higher it goes, the more fearful, the lower it goes. Traditionally speaking, when the market's really volatile, the VIX spikes. Again, this is my very simplistic view of it.
You're right on so far.
Okay, cool. So far, so good. Last week was a very interesting week for the market. And I would have expected before I looked that the VIX would finally be ticking up, and it crashed to the low 20s. I was expecting mid 30s because I hadn't looked in a few days. It crashed to the low 20s. I'm like, what the hell is going on? I don't get it. So explain, define, help me out.
Yeah. So the VIX is a volatility index. And what it does is measures 1 month out contracts, synthetic contracts called options, which are determined what the VIX output is as to whether people think the market's going higher or lower and the degree of that. And the wider the disparity of those numbers, the higher the VIX goes. So essentially, the higher the VIX is, the higher the range of outputs, good or bad, that could be 1 month out in the stock market from now. So is that, if I'm not clear there, have me clear that up further.
Perfect. Got it.
Okay. Got it. Yeah. So what's going on with this thing, right? Because all this crazy economic news is coming out, the market's flying all over the place. Why is it relatively low? So I will say this to begin with. 20 is kind of the barometer. Beneath 20 is normal. When you hit 20 to 30, it's what they call the chop bucket. And that's where the market chops, right? When it goes from 30 to 40, that's what they call the F bucket. And that's not a good situation to be in, obviously. You know what I'm getting at when I say F. But essentially what we've had this year is you haven't had massive spikes. So to Michael's point, it's in the mid 20s right now. And it got down to the lower 20s last week. To give context as to where it can go, it can get up at extreme levels in the 50s. And so that's when you have like COVID, the market's crashing, the world's literally ending, the volatility index kicks up to that mid 50s bucket. And that's generally when you want to get the F out of the way, right? When the VIX goes up to a big degree, that's not because there's volatility to the upside coming. That's not how that works. The volatility
that's not good.
Right. The volatility is coming to the downside. And so at the end of the day, that's what you've seen. But this year, it's been such a steady headwind of bad news, if you will, that the market's kind of digested it, and the disparity of what's going to happen a month out from now isn't that wide because we kind of know the information that we're getting hit with. And it's all from the same hymn book, if you will. It's all the same tune. It's all been bad, and it's been persistently bad, but it's been directionally
it's
going
all
the
one
same
direction. Yeah.
Exactly.
Yeah.
Exactly.
So the other thing I was looking at this, and again, my uneducated understanding of it is the VIX was a lot more volatile earlier in the year than it is today. Again,
because the information was new. The information was new that we were getting and digesting.
Got it. Because what again, I could be wrong. This is why I'm asking you. What I thought could be happening, whatever, is all of retail or much of retail got washed out earlier in the year, and they're just not in the market. So now what you have is the big boys, which are less emotional, less fear-based, and again, they're just playing the same playbook. So that was something I thought, but again, I could be wrong.
No, there's a lot of logic to that as well. I think, admittedly, I think that it's more of the fact that we kind of know the bad data that's coming, and we know the category that it's going to come from, that there's nothing shocking the market. When you shock the market, that's when the VIX pops. So like the fact that, if inflation came in at 9.4 or something like that, that would absolutely shock the market, and you would see a massive bounce in inflation or in the VIX. But one of the things that's important to realize is that you can invest in the VIX too. It's a synthetic instrument, but what people were doing for a prolonged period of time, they were betting that the VIX index was going to remain low. So this is back in like 2019, 2018. What you had was really low volatility, and people were shorting the VIX index because it just stayed low. You know, monetary policy was super loose, so things continued to move up. 2019, 2020, and then all of a sudden there was a massive reversal. And what you had was an unwind in the VIX, and literally you had a couple firms go under who had big strategies based upon short VIX index. When the VIX shot up, the shorts got whacked. And it was a strategy that worked for a long period of time because volatility was really low, but volatility is violent. Like, I don't know if those, volatility is violent. When volatility picks up, it picks up sometimes
extremes.
in a massive way. And that's what happened. They got squeezed out of that trade. And some of these firms, two firms specifically, literally went under based on that VIX movement upwards and their inverse relationship with what they wanted the VIX to do.
Yeah. So folks, as you can clearly see, Taylor is somebody I go to better understand the market. You should follow him on Instagram. Where do they do that?
Yeah, thanks so much. Yeah, we're at Life Goal Investments on Instagram. So at Life Goal Investments.
Yep. Do me a favor, follow him. And then of course you can always ask him a question and I'm sure he will create content if he doesn't.
Please do. We're always looking for good ideas that people need answers on.
Awesome. Thanks, Taylor.
You're the man.